Hello guys, right, gold. I missed a gold trade this morning. I was looking at gold and I was contemplating whether to go for it or not. I wasn't quite sure, and it absolutely flew about 70 or 80 pips in front of my eyes around here. Not to worry though, because it was I was well into my trading day and I'd done about 3 trades by then. I'm up to my 5th including this gold trade now. And I've made 5 or 6 videos, and I've made about 5 or 6 tweets, and I've had my breakfast, and I've had a couple of cups of coffee. So, you know, if you get this, then you will really get it. And making the videos for you guys after having a break for a couple of years because I was just doing my own thing. If you look at my YouTube channel, you'll see that was the case. Has sort of turbocharged my trading because frankly I'm getting bored. You know, trader's day is very boring really, and obviously you do have a fantastic lifestyle, you know, trading from the beach, trading from holiday destinations and so on and so forth, but you know, there's a limit to how much dossing about and how many box sets you can watch while you're waiting for the perfect setups. So making videos seemed the obvious thing, and I'm not interested in having subscription services and God knows what else going on, because I might just as easily disappear and travel around the world or whatever and not want to do this anymore. So while I'm in the mood and the right frame of mind, I want to do it. But anyway, gold. So I did my analysis on gold after missing that trade, and I've got a few lines on here. We ought to get rid of those as well. Some are from other currency pairs, so I need to tidy this up. So it's a pretty clean chart, as you can see. I know it looks messy when you open up my videos and you see a spaghetti junction of lines and ascending and descending trend lines and all sorts, but it really isn't. I don't want to frighten you off. I've even taken my old indicator, hidden that now, because it is becoming less and less important as I learn this one. The other one's been on 15 years, this has been on about 3 months. So this was a lesson in understanding how the histogram works, the histo alert should I say. We know we're long this current daily because we're above the daily open. That's what that's telling us. So we just draw in a few levels on this current daily chart. I'm not going to bother putting the weekly and monthly on there because it does just make it look messy, but you know, at the point I entered my trade, I think I was above the daily high. So H4 we're busting through it, but we haven't closed above the H4 there. I'm using this last 2 candle reversal: high, low, lower, high, lower, low, low, high, higher, low, higher, high, and continuation. We are, if you take this should be the correct level for the reversal, although saying that, if that low is not lower than that one, it means it's an inside bar. So, and this is how precise I take my levels: 1642.90, 1642.29. So that's the actual H4 reversal high there. So it's attacking that now, which makes this even more good to the long side, because in order to, according to my rules and what I've studied for years now and traded for years now, you have to break and close above that if you want to go any further up, and that is the actual trend reversal. That's why that is more powerful than that one, because it is the reversal candle, and that's important. And then the next most important candle is the next daily high. Although having said that, we've actually reversed high, if that makes any sense, there. This has already done the confirmation on the daily candle. It's it's gone long, it's closed there, and look what happens. I tell you this time and time again, when you get a break and close, in other words a trend reversal, you actually get a pullback, and it pulls back to test it's broken. And look at that there. If I put that on there, you know, you never ever stop learning in this stuff. You know, I've forgotten more than most people have ever learnt, and I don't mean that in an egotistical, big-headed way. It's the truth. You know, 15 years of studying this, that would be important there as well, because that's a resistance broken, the last most recent resistance broken as the price moved up, and you can clearly see it has used these levels there and there as resistance levels. This one's more important than that one because this is the most recent one, and that's why it came back to attack that. So that was an absolute gimme trade 2 days ago. And then we've got this above here, which represents a potential level of testing, and lo and behold, what happens, it's gone up there, tested that, and probably popped down. I'm not going to go into the guts of that thing because it overcomplicates things, but you would need this level on to continue further up, and you know, that's where your weekly levels start to come in. But the weekly level up there is miles away, and it's got a oops, that snapped to the wrong one there. By the way, I can't share this indicator. You just need to go to one of those building websites, Fiverr or something, and get some sort of guy to trade it for, to build it for you, or MQL5, and someone will build it for you. A few dollars. High, low, lower, high, lower, low, 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 high, higher, low, higher, high, and break would mean the weekly has actually reversed against this whole weekly reversal to the downside. So it stands to reason that that level is massively significant, and it is going to attract the price to it, providing we use the lower time frames to watch the pullbacks, reversals, or continuations, should I say, reversals, continuations, until that level's attacked. So there is a fantastic opportunity from here to here. It's only a mere, well, that'll be something like goodness only knows. Gold confuses me. It's about 200 odd pips, I think, by the looks of that. But inside here will be daily. There isn't a daily high, I don't think, but there will be a potential H4 high. There is a daily high. No, there isn't. H4 high in there. I'm not going to go into that. We'll get back to this trade. So using the indicators, getting all your ducks in a row was how I entered this trade, really. Did all my levels again, as I said. But when this pops up on the H4 above this level, you know you're absolutely mega bullish. H1, before I entered the trade, had broken the high of the previous candle, or bar should I say, which was the trigger to go long, which I missed out on, as I said to you. And then let's put a vertical on the candle we're on. So this is our new candle open. That's where we close, that's where we open. The other thing I must say now, and I haven't said enough of, the pivots I've never been a fan of, but they are proving fantastically useful now, because if that R1 gets busted, it is highly likely, and closed above, but they are vague compared to my precise candlestick levels. Pivots are notoriously vague. One broker will have a different level, so you can't treat them with precision like I do my candle highs and lows. Having said that, when that R1 gets busted, it's highly likely R2 will get busted. Although remember, today we are in a weekend, and the disclaimer always follows: don't trade what I talk about, learn to trade yourself from these videos. But once that's broken and cleanly broken above, and potentially used as support as well, then it will potentially go up again. And you use the reversals that I'm teaching on here to attack those levels. But back to this, when that happens, that high of that breaks, you know, I'm going to say a swear word, goddamn well, it's probably going to go further. So you check your M30 is all good to go as well, and it was. Green candles all the way. Busted through the R1 and used it as resistance becomes support. here and here. M15 before I entered the trade. Remember, the green highlighted level should be behind that brown thing there. Let's go back to H1 and put that thing on. Sorry, my indicators seem to overwrite it there. So M15, when I was considering entering, it had gone from pullback, and then you got this massive spike up there, but it stopped just short of the 60 level, 1660. And what do I say so many times? Don't target that, always target a little bit short of it. If they've tested it and done this nasty little trick they do, then you can go for the overshoot, because the second test is highly likely to bash it because there are stops there. Don't know why they do that, but I've noticed it and I've mentioned it in probably every other video I've written. I've said about don't go for that level straight away. Also of interest is it's broken the 1657.50 level. These are 250 pips apart, these. It tested it and then broke through it again, so that was another reason for entering. The bullishness was crazy, but this indicator was what led the way today, and the fact I missed that earlier trade for a monster move. And then you can see again, what have we got going on here? Before I entered my trade, we got this this fantastically bullish configuration here, where this breaks through the buster, if you like. This busted the 20 level, then it's pulled back, and then finally it's busted the 20 level, and critically, if you put your mouse on there, 28.38.69, I want to see that high broken, 30.37.05. This is precision trading, guys. You know, I can't stress it any more than that. So what happens after that? It's highly likely that's going to go. And what did it do? It busted through that 60 level with gusto. There it is there, that candle there. You can see it's poked through. That's the one that went short. This stuff happens like clockwork, guys. You just have to learn and study it and be patient, and then eventually, hopefully, you'll get to my level where you can just flick through these charts. And but that doesn't mean you should be complacent. You should always be patient, disciplined. Look, it's still going to go. It's going up to that R2 potentially. You can do your ascending trend lines properly, in my opinion, or do them the way I do them, which is only attach them when the price breaks through a previous low. So this can connect to that when that thing, sorry, in a high in an uptrend, that thing connects to that. Look at this thing going again. I love it when I'm right, and I can't be bothered to trade it because I'm quids in today. So there is another good connection point now, because that high has been broken by that price. So that has not held as resistance, and this has held it as been new support created because it's busted that high. It's no different than if I looked on the candlesticks, you would see two what are we on, 5 minute, 2 or 3 15-minute, or 2 15-minute candles. One's gone up like that down, and then the other one's broken the high. So you've had 15-minute candles making higher lows and higher highs. That's my candlestick trend for you. And now this one's busted this one. We can tighten up well, we could have tightened up to here prior to our entry, and that would have given us a potential scalp trade to the short side. Look, it's testing that level again. This one's just got too much. It's getting near the Easter break now, so I imagine these guys want to get their targets hit and done. And here it goes again. While I've been talking to you, gold has just moved. Well, let's say from there to there, 50 odd pips, you know. As I say, once this high is broken, this high here has broken by that high there, then you can tighten up and disregard that previous ascending trend line. That's the new one. This one can go. And that potentially opens up a whole new step way down when the trade potentially reverses down to here, and then down to there, and then down to there. I'm talking about the ascending trend line. So there's numerous ways to trade. If all you do is add my candlestick reversal candlestick trend to your current trading method, then you will probably it will improve your trading no end, I'm sure. And I don't mean that in a derogatory way. I'm sure if you're trading for a living, then fantastic. But if you're just a novice trader, still paper trading, demo trading, then hopefully this will help you. Notice they've cut it short again. If you've gone for that R2, then you might easily have got nearly there and draw down again. So always just, the best trade would have been to short just short of that H4 high there, and that's the one I said that they would aim for, what seemed like a lifetime ago, I know, to actually get the valid reversal. Gold is a monster, so be careful, guys. I suggest you stay with the other pairs, but price action and technical analysis, in my opinion, works on every time frame, on every currency pair. I'm not so sure about stocks. Indices, yes, but specialize if you want to on one particular pair and own it. The method works across the board. They are having fun with gold today. Thanks for watching. Have a great weekend, guys. Have a great Easter. And remember, what I talk about here is teaching, not suggestions for trades.